The biggest Bitcoin holders just blinked, and Wall Street analysts are scrambling to rewrite their predictions. By the end of this video, you'll know exactly why $4 billion vanishing from Tether might be the best signal crypto has seen in months, and which IO20022 token is positioned to benefit most for what's coming next. Here's what just happened. CryptoQuant just confirmed Bitcoin sell pressure is closer to exhaustion than it's been since the rally started. Translation: the whales who've been dumping coins for months are running out of ammunition. But here's the kicker. $4 billion in DT market cap just evaporated in days. Most people think that's bearish. They're dead wrong. When stablecoin supply drops this fast, it means two things. Either people are cashing out to fiat, which would be terrible, or they're converting to other assets. The data shows it's the second one. That $4 billion didn't leave crypto. It moved. Indeed, there's one detail almost everyone missed about where it's heading. I'll get to it in a moment. First, you need to understand what sell pressure exhaustion actually means. Imagine a dam. For months, the dam's been releasing water. That's sellers dumping Bitcoin. CryptoQuant's data shows the reservoir behind that dam is almost empty. When sellers run out, the only direction price can go is up. Basic supply and demand. But this ties into something way bigger than just Bitcoin price action. We're watching the old financial system and the new one collide in real time. Indeed, that's where IO20022 comes in. IO20022 is the new global messaging standard for banks. Think of it like this. Right now, banks speak different languages when they send money to each other. IO20022 is the universal translator that lets them all communicate seamlessly. It handles more data, it's faster, and it's becoming mandatory worldwide. The deadline? March 2025 is when the last major banks have to switch over. Here's why this matters to you. Only certain cryptocurrencies are built to work with IO20022. These aren't your typical meme coins. These are tokens designed to plug directly into the banking system that moves trillions of dollars every single day. XR, XLM, LGO, HBR, and the one nobody's talking about enough, QNT. Quant Network and its QNE token are the backbone connecting blockchains to this new banking standard. While other tokens can work within IO20022, Quant built the bridge that lets any blockchain talk to any bank system. They're not competing with XR or the others. They're the infrastructure all of them might need. Now here's where it gets interesting. Remember that $4 billion in DT that disappeared? On-chain data shows major movement into altcoins, specifically the token's position for institutional adoption. Not retail FOMO, institutional positioning. The smart money isn't waiting for announcements. They're moving now while prices are still reasonable. Indeed, this is exactly when exhausted Bitcoin sell pressure becomes rocket fuel. When whales stop selling Bitcoin and stablecoin supply is low, any buying pressure sends prices vertical. We've seen this pattern before, right before every major rally since 2017. If you're looking to position yourself in tokens with real institutional backing, platforms like BitUnix let you trade QNT and other IO20022 tokens. Links in the description if you want to check it out. But what should you actually watch for? 3 things. First, Bitcoin holding above support while sell pressure stays low. That's your confirmation the exhaustion is real. Second, watch for more stablecoin supply to flow back in. When DT and DC market caps start climbing again, that's fresh capital entering crypto. Third, track institutional announcements around IO20022 implementation. Very bank that confirms their switchover date is a catalyst for these tokens. The March 2025 deadline is approaching fast. Indeed, here's the open loop I promised earlier, the detail everyone missed. That $4 billion in DT didn't just move randomly. Wallet tracking shows significant portions flowing to exchange wallets that primarily list IO20022 compliant tokens. The institutions aren't advertising their moves. They're just making them. This is educational content only, not financial advice. Ways to your own research before investing. But the data is clear. L pressure exhausting, stablecoin supply moving strategically, and the global banking system shifting to a standard that only certain cryptocurrencies can work with. Those 3 things happening at once isn't coincidence. The old guard isn't fighting crypto anymore. They're quietly building positions in the tokens that bridge both worlds. Follow Stack Daily 60 for daily crypto and money tips.